Hello friends, the Social Security Administration is quietly holding back an average of 90/40 every single month from millions of Americans over 65, and most of them have absolutely no idea it's happening. There is a deadline coming up on July 1st, and if you don't act before that date, you could be leaving thousands of dollars sitting in a government account that should already be in your pocket. Stay with me until the very end of this video, because the last thing I'm going to share with you is the one that almost nobody in this country is talking about, and it could be worth more to some of you than everything else combined. Let me know in the comments which state you're watching from. I want to see how many of us are in this together today. Now, before we get into the details, I need you to do something. I need you to hit that subscribe button right now, not because I want the numbers, because this channel exists to put real money back in real pockets, and if you're not subscribed, you are going to miss the next video, and the next video could be the one that saves you a late penalty, a wrongful garnishment, or a benefit cut you didn't know was reversible. Missing this isn't missing content. Missing this costs you money. So subscribe and turn that bell on. Let's talk about what is actually happening here. The Social Security Administration manages a system so complicated that even the employees who work inside it don't always understand all the moving parts. There are offsets, deductions, overpayment claims, work penalties, coordination rules with Medicare, GPO calculations, and a dozen other mechanisms that quietly reduce what lands in your bank account every month. Most seniors assume that whatever SA deposits is whatever they're owed. That assumption is costing the average affected household $940 a month. Some of you are losing far more than that. This video is going to walk you through the major withholding categories, name them clearly, tell you exactly how to check whether you're affected, and give you a specific action step for each one that you can take this week before July 1st. The first category is overpayment recoupment, and it is by far the most aggressive withholding SSA runs. Here is the wrong assumption most people make. They think SSA will notify them in advance, explain the situation clearly, and give them time to respond before touching their check. That is not what happens. SSA can and does begin withholding from your monthly benefit the moment an overpayment determination is finalized in their system. The notice sometimes arrives after the money is already gone. Under the current recoupment rules, SSA is authorized to withhold up to 100% of your monthly benefit to recover what they claim you were overpaid. 100%, that means a check that should be $1,800 becomes $0, with a letter explaining why arriving 2 weeks later. In fiscal year 2023, SSA identified approximately $4.6 billion in overpayments across Social Security and SI programs combined. Hundreds of thousands of beneficiaries are currently in active recoupment. If your benefit drops suddenly and you didn't get a clear explanation, call SA directly at 1-800-772-1213. Ask the representative specifically whether there is an active overpayment recovery action on your account. That is the exact phrase to use. Write it down. Is there an active overpayment recovery action on my account? If the answer is yes, you have the legal right to request a waiver using Form SSA 632. You also have the right to request a reduction in the recoupment rate so that SSA withholds a smaller percentage each month rather than gutting your check entirely. But you have to ask. They will not offer it unprompted. The second category is Medicare Part B and Part D premium deduction, and this one catches people off guard because it looks routine. Your Medicare Part B premium is deducted directly from your Social Security check before it ever reaches your bank. In 2024, the standard Part B premium is $174 per month, but if your income 2 years ago, and I want to emphasize that 2 years ago, exceeded certain thresholds, you are paying an IRMA surcharge on top of that. IRMA stands for Income Related Monthly Adjustment Amount, and it is calculated based on your 2022 tax return if you're being assessed in 2024. Here's where the mistake happens. Life changes. People retire, income drops, a spouse passes away, a business closes. SSA doesn't automatically know your income went down. They keep charging you the higher IRMA rate based on old data unless you file Form SA-44. That form is called Medicare Income Related Monthly Adjustment Amount Life-Changing Event. It allows you to report a qualifying life change and get your premium adjusted to reflect your current income. A senior paying the Tier 3 IRMA surcharge could be losing extra $840 every single month on Part B alone on top of the standard premium. That's money that could be coming back to them. File SSA-44. Do it this week. Do it before July 1st so any adjustment can be applied to your second half of the year billing. The third category is the windfall elimination provision, commonly called the WEP, and there is a tremendous amount of confusion about how it actually works. The wrong assumption is that WEP only affects government workers or teachers, and that if you're a regular retiree, it doesn't apply to you. But here's the real mechanism. If you worked any job in your life, even for a short period, for an employer who did not withhold Social Security taxes, And you also earn Social Security credits from other employment. WIP can reduce your Social Security retirement or disability benefit by up to $597 per month in 2024. Government jobs, certain railroad positions, some school districts, some foreign employers. These are the sources of non-covered pensions that triggered WIP. Now here is what very few people know. If you have 30 or more years of substantial earnings under Social Security, and substantial means meeting a specific dollar threshold each year, which in 2024's 275 files to WIP does not apply to you at all. If you have between 21 and 29 years, the reduction is phased. SSA calculates this using your complete earnings record, and they sometimes get it wrong. Errors in WIP calculations are not rare. They happen because SSA doesn't always have accurate records of your non-covered pension amount, and when that figure is wrong, call 1-800-700-721-TOY13 and ask for a copy of your PBIS, your personal earnings and benefit estimate statement. Verify that every year of substantial earnings is correctly recorded. If there's an error, file Form SA-7.08 to request a correction. 1 year of missing credit under WIP can mean losing over $4 a month for the rest of your life. The fourth category is the government pension offset, or GPO, and this one hits surviving spouses the hardest. If you receive a pension from a federal, state, or local government job that did not pay into Social Security, GPO reduces your spousal or survivor Social Security benefit by 2/3 of your government pension. 2/3. So if you receive a government pension of FERD's $200 a month, SSA reduces your spousal benefit by $800 a month. In many cases, this eliminates the spousal benefit entirely. Completely, not reduced, gone. The wrong assumption here is that your late spouse's Social Security is yours to claim freely because you were legally married and you paid into the system through your other work. GPO operates separately from your own retirement benefit. It specifically targets spousal and survivor benefits. Roughly 750,000 people are affected by GPO right now, according to SSA's own data, and the majority of them are women. If you believe GPO is reducing your survivor benefit, request a GPO calculation review from SSA, bring your pension documentation. Specifically, bring proof of your pension amount and the date you became eligible. In some cases, if there's been a pension restructuring or you return to Social Security, covered work for at least 5 years before retirement, you may be exempt from GPO entirely, and SSA needs to be made aware of that change. The fifth category is wage garnishment and legal holds, and this one blindsides seniors who assume their Social Security is untouchable. Technically, Social Security benefits are protected from most creditors under federal law. Credit card companies cannot garnish your benefit. Medical debt collectors cannot garnish your benefit, but the federal government can. If you owe back taxes to the IRS, they can take up to 15% of your monthly Social Security through the federal payment levy program. If you have defaulted federal student loans, and yes, there are seniors in their 70s and 80s still carrying federal student loan debt, the Department of Education can garnish up to 15% of your benefit as well. Child support and alimony obligations, if court-ordered, can also be deducted directly from Social Security. If your benefit is being reduced by any of these garnishments and you are below 150% of the federal poverty level, which in 2024 for a single person is $21,870 a year, you may qualify for a hardship exemption from the federal payment levy program. You must apply for that exemption proactively by calling the IRS at 1-800-829-7650. They will not offer it to you. You have to call and ask specifically for a financial hardship review of your levy. That call could restore hundreds of dollars to your monthly check. Make it before July 1st while the second half levy cycle is still being finalized. The sixth category is the retirement earnings test, and this catches people who are between 62 and their full retirement age and still working. Here's the wrong assumption. People think that once they claim Social Security, their benefit is locked in and nothing they do can touch it. The retirement earnings test says otherwise. If you are under your full retirement age, which for most of you watching is 67, and you earn more than $22.30 in 2024 from wages or self-employment, SSA withholds $1 from your benefit for every $2. So if you earn above that limit, every $2. So if you're earning $32,320 at a part-time job, you're $10,000 over the limit, and SSA withholds $5,000 from your benefits across the year. That can mean several months where your check is zero. Now, here is the piece most people miss entirely. The money withheld under the retirement earnings test is not lost forever. When you reach full retirement age, SSA is supposed to recalculate your benefit upward to account for the months that were withheld. Your monthly benefit increases permanently to reflect those withheld months. But SSA's recalculation is not always accurate. They sometimes fail to apply the full credit. If you were subject to the earnings test in any year after you claimed benefits and you are now past full retirement age, request an adjusted benefit calculation review. Do it in writing. Send a letter to your local SSA office requesting confirmation that all retirement earnings test withholding credits have been applied to your current benefit rate. If they haven't been, you could be owed back pay. The seventh category, and I told you the last one would be the one almost nobody talks about, is voluntary tax withholding from Social Security, and the way this works has an almost invisible trap inside it. Many seniors, on the advice of a tax preparer or financial advisor years ago, filled out Form W-4V and elected to have federal income tax withheld from their Social Security benefit at a flat rate. The available rates are 7%, 10%, 12%, or 22%. Choosing withholding makes sense for some people. It can help you avoid a large tax bill in April. But here is what almost no one checks. If your income has dropped significantly, you lost a spouse, you sold a property, you stopped taking IRA withdrawals, your effective tax rate may now be far lower than the withholding rate you elected 5 or 10 years ago. Some seniors are having 22% withheld from their Social Security when their actual federal tax liability on that income is zero. Because if your combined income, which is your adjusted gross income, plus any non-taxable interest, plus half of your Social Security benefit, falls below $25,000 for a single filer or $30,000 for a married couple filing jointly, none of your Social Security is taxable, not a dollar of it. Yet SSA is still dutifully withholding whatever flat percentage you told them to withhold years ago, and that money sits in an IRS account until you file and claim your refund if you file. Seniors who don't file because they believe they owe nothing are leaving that money with the government indefinitely. The fix is simple. File a new Form W-4V with SSA. You can download it at SSA.gov or pick it up at any local SSA office. On line 7, you can select a lower withholding rate, or you can elect zero withholding entirely. Mail it to your local SA payment center. The address is on the form, and the change takes effect in the next 1 to 2 payment cycles. For a senior who has been withholding 22% on a $1,800 monthly benefit, that's $396 a month that could be sitting in their pocket instead of waiting in an IRS holding account. $400 a month, not a discount, not a credit, not a future benefit, cash every month. Check your benefit deposit. Look at what is listed on your SSA My Account page at SSA.gov under Payment History and cross-reference it against your original benefit award letter. Any discrepancy between what SSA says your benefit is and what actually arrives in your bank account represents a withholding. Some of those withholdings are legitimate, but some of them are errors. Some of them are based on outdated income data, uncorrected pension records, missed life event updates, or tax withholding elections from a decade ago that no longer reflect your situation. Millions of seniors are losing a $940 a month or more to one or more of these 7 mechanisms simultaneously, and the window to act is right now before July 1st, when SSA and the IRS finalize second half adjustments and levy determinations for the year. After that date, corrections that could have taken effect in July get pushed to September at the earliest, and that's 3 months of benefit you cannot get back. The action steps are real, the forms are real, the phone numbers are real, and every single one of them is available to you at no cost. You do not need to pay an attorney or a benefits consultant to make these calls. You need a phone, a few hours, and the knowledge of what to ask for. That knowledge is what this channel exists to give you. If this video helped you, or if you know someone, a parent, a neighbor, a spouse, a friend from church or from your building, who is on Social Security and has never once questioned whether their check is the right amount, please share this video with them directly. Don't just forward a link. Sit down with them, play this video, and watch it together, because the system is not going to correct itself. The letter is not going to arrive on its own. The money is not going to move unless someone makes the call. And sometimes the most important thing one person can do for another is hand them the information they didn't know they needed. We'll be back very soon with the next one.